Let's talk now to Vineet Bolinchkar. He is joining us on an interesting note he's put out. He's the head research at Ventura Securities. Vineet, a very good morning to you. And I was going through your note yesterday on 197, and I have to admit it left me a little gobsmacked because you have said at an upside of 117 rupees. You're saying that Paytm is poised for a robust recovery, and you see, a target price really coming in quite massively. Now, I'm just wondering what is making you so bullish on Paytm when the regulatory troubles for the stock just don't end?
So let me take you back 1 year to FY23. The company had broken even, okay? And then you had the RBI strictures coming in during January. After that, you saw their business fall close to 20% at its nadir. But from there, they've rebounded back to the, their normal business state, which was there in January, prior to RBI strictures. And what is happening is that in spite of them losing the payment bank license, FASTag and other services, wallet being shut down, they have done a remarkable job of coming back. Their merchant base has not suffered. In fact, it has grown. And, we are expecting that their GMV will double from here in the next 3 years, while their loan coordination business should expand by 4x. And, merchants and the marketing services, X sales to Zomato, should actually go up by another 20% over the next 3 years. So, we are talking of substantial business recovery and growth. And, to my mind, there is no digital platform that is as robust as Paytm offers and of gold standard in terms of technology. So we remain very constructively bullish, and we expect the stock to break even EBITDA before your ESOPs this year and get into the black in terms of profits at the end of FY27. And notable is that, they've got the nod from RBI for the payment aggregator license. Now, this would not have been possible if, some kind of approvals or nod were not coming from the RBI. So all good things happening, and we believe that the stock is at the precipice of a good, trajectory playing out.
Vineet, while we give it that they are, some may argue, gold standard in the business, but there is increase in competition, even though they might have the first mover advantage as it stands. A few things are working out in their favor, as that approval that we got, and the stock's also reacting to that this morning in pre-open trade. Any downside risk to your target price that investors should keep in mind?
So, I believe that most of the downside risks have been factored into price, and they have circumvented their model away from any kind of regulatory stricture. And, just to give you a sense, they've not restarted PMPL or the wallet or, even payment of housing rent on their apps, because they believe that they don't want to get into any kind of friction with the regulators. So once the growth comes back, and they're steady with their, seeding of the UPIs of the partnering banks, they expect that once they complete this, the payment bank will come back. So we are quite positive on, more positives than negatives out here, and risk is already priced in.
Vineet, so, even your bear case scenario has a target price of 870 rupees for Paytm. In your bull case scenario, going up to 1,444 rupees. Now, the only question is that when you see their GMV doubling, how does that really happen when the biggest part of the business has already been hampered and the whole landscape is changing so quickly? I'm just wondering, Vineet, and I'm asking you very honestly, are you being overly optimistic right now?
No, let me give you look at it. They did not lose any of their merchant base. Okay, over the despite the disruptions that happened. In fact, they have got 30,000 feet on street who were able to retain their merchants. Merchant payments are coming back to normal, right? And coming back to the levels prior to that of the RBI stricture. So, we have covered up whatever losses were made. So that is very important. Secondly, none of the competitors have been able to get their merchant model right the way Paytm is running. Okay, even if Jio comes in, they will take at least 3 to 4 years to, kind of get their act together. And another thing, which is very important that we should understand is that our payments business as a country, UPI payments is a fraction of our GDP. While it used to be somewhere around multiples in China. So, we have a very, very long way to go. And I believe that 4 to 5 players can easily coexist and be profitable also. But, Paytm is past its burn rate, and now they're into the consolidation and the takeoff stage, while the rest of the players will actually have to burn money, get themselves seeded into the ecosystem, and from there grow on the path to profitability. So we are way ahead of the curve as far as the positivity starts playing out.
Okay, just one last question. This nod from the Finmin for downstream payments in Paytm payments business, do you think that this is a big positive trigger in the nearer term? Because, of course, your targets go up to FY27. You're giving them 3 years to break even, etc.
Yeah, I think it's definitely positive to that.
Okay, thank you so much, Vineet Bolinchkar, there, Head Research, Ventura Securities. I mean, he stuck his neck out. He's saying that Paytm is going to be the big bet by FY27.